Thanks for tuning in. In this video, we're doing a weekend review for the week ending September 17th, 2021. Quadruple witching is over, and every single day this week, almost every index and chart that we're going to look at today closed lower and towards the low on the week. Gave up to 10. That's a problem. This gap here at 443.36 closed below. Get that line off the chart. Really, the invalidation is here at 436.12. For 434.50 is what you have on the daily with after hours on. So this was a low that was set pre-market. We know that those lows love to get tested. Let's take a look at the structure. No doubt, rising wedge, ascending channel, still in the channel. Where did they close the day? Right at the channel. That's where all the volume came in, just like last time, right? This looks very orchestrated to me. This is what quadruple witching is all about. There's a lot of options for different asset classes expiring. This allows them to create liquidity. I think this is the beginning. I don't think this is the end. I think this is the beginning either of a massive move up or the beginning of this breakdown. We've had this 40-period moving average essentially play demand, and this is the beginning of the year, all year long. I mean, here you're below it for a few days, right? So each time you can stay below 2, 3, 4 days max. But going back to the beginning of the summer, each time she came down to the 40, it was bought up immediately and then rallied. This time she came down and went sideways. So that's the structure of a bear flag. And generally, when three things can happen when you get to a moving average. It can touch and go sideways, which is what we had here back on September 13 to start the week. They just sold premium all week, and then on the last day of the week, they killed it in one direction because the market was likely directional long. And what does the market like to do? Make everyone look like a fool, myself included. So they closed near low in the week. Is anything terrible just yet? No. However, you need to be paying attention because the structure of the market is changing, and it could be that we are now entering a period of sell the rally. The weekly close below SMA 10 is a big problem, but you're still above a rising 20, a rising 40, so really nothing is that horrible. And even if you were to have some type of problem, this is the problem that I would see. Something like that. So if the top really did get put in, you would look for a rally here around the 20, right around 440 to 435. The weekly 20. Look for a rally back up to test the all-time high because there is a gap up here now at 453.08. The high on the week is 452. Yep. So that the gap here from August 30th, that's an open gap at the top. Markets love to do this. They get to the top, then they gap and just fall apart. And we have now gap and crap for 2 weeks in a row. And the PPO is now heading lower. Break this low here, and you will have broken the wave one low. Now, this structure to me, I call a rising wedge. Could be an ending diagonal in Elliott wave. So we'll just leave it at that. You need to pay attention. Again, one close below does not make a trend. However, if by Tuesday we are not, even by Wednesday maybe, with the FOMC, one of those time is greater than price. If by Tuesday, Wednesday we're not at least back at the 200, and the best example of that I can give is, the 40. The best example of that I can give is Twitter, right? Where they love to do this. They come down, look at this definitive close below the 200 inside bar, right? But what were they doing that inside bar? They were covering all day. Day 3 recapture. Okay, and then what are they now doing? Bull flag. Recapture the 10, recapture the 5, recapture the 200. So this is how they repair the chart, and that's what they're doing. Still a lot of work to do on Twitter, but we'll get there when we do. Just keep that in mind. That's one potential scenario to look out for as you come into Wednesday, right? They gave up the 40 on Monday. They close inside. On Tuesday they recapture. On Wednesday they go, as a result of what the FOMC said. And the other is also true. If they don't like what the Fed says, this is a perfect excuse to crash them. Where to? The Qs, bring them back to the 100. And I think this is going to be the theme on all these indexes, right? Bring them to the 100. You look at the weekly. It's not a good look. PPO bearish divergence. This is the power of 3. 1, 2, 3. Clearly the high in momentum came back in August, but the high in price came, in August of this year. 1 year later of grinding higher, exhausting the bulls, building these bearish divergences. Again, nothing wrong, above the trend, above all moving averages and trending higher. Nothing wrong with this chart. Just pointing out that this is 2 weeks in a row now. We are pulling back. And when we do pull back, we tend to pull back into the 20-period moving average, which would be down here at 355. And there's this gap right here, which makes almost too much sense, right? So if this was a wave 5 up and then a little ABC down, we're working on the next wave here. As long as any pullbacks into 340 to 350 are strong buys. But again, we closed the week at 374. That's a 12% potential down. That's definitely in the cards if the market starts to fall apart. Same thing here with SMH. I mean, it's like all the indexes that have been leading are now kind of topping out. And again, above, let's clear off the chart here. Above that high, the high from last September, earlier February. Because remember, NVIDIA topped all back here. This was the corrective pattern that enabled the new all-time high. So this corrective pattern here, boom, new all-time highs. As long as you stay above the 258, just like back here, as long as you stayed above this high, there's nothing really to be concerned about. I mean, the concern comes when you're below the series of higher lows, right? Series of higher low, 248, another one here. Come all the way back down, fill this gap at 256, make everyone think the world is ending. All you've done is come back and tested this level again. What is of concern is, you get the PPO cross, and now we're getting the bearish cross again. So we're not really seeing the bears do much. The histogram shows that. Price shows us that. This, to me, looks like an ascending triangle, and at some point, she's going to go to $300. That being said, she could come back to 250 before she does that. And finally, my favorite, most heartbreaking index, IWM. We did have the third tag of weekly 40, above the 10, below the 20. Sellers back. PPO started its decline in February. Here we have 134 for the blue, 15. Yeah, so a fresh low for the blue and red lines. That's why the histogram is now starting to expand out again. So you're seeing momentum actually return to the downside, but it's less than down here, which was less than back here. bottom line, you're still in this, in my opinion, contracting triangle. I don't know if this is the best count or not. This is the count I'm going with. All the charts that I watch, all the memes, they topped in February, so it makes sense that that's when this also happened. So, you know, corrected pattern, corrected pattern, corrected pattern, corrected pattern. One more coming lower only makes sense. So, you know, our ABC down, something like that. Let's see. You know, staying within this descending channel and giving you that zigzag look as price comes all the way back down to fill this gap. Again, they have to get through the 40 first, and they can't do that. They're not giving up the 40. The bears took it one day, and the bulls have reclaimed it for 3. So there's no other way to look at that than bullish. And as long as she remains above 209.88, there's nothing to be concerned about. This dip is for buying. And the fact that she closed above the 40 is exactly what you want to see. I mean, this is a rectangle, right? So you take this rectangle, and this demand line is pushing price through the rectangle. So this is what's going to happen, right? By November, price will be outside of this, creating a breakout at this current pace. And the sellers, right? Where are the sellers? They're at the 20. They're at here, okay? So there's your selling line. So within, here's your demand line, and here's your seller line. You're going to have a break of this very, very soon. Either the 40 at 220 is going to break, or the 20 at 223 is going to break. And you don't really need to guess, guys. Like, that's where you get in trouble. Wait for the break. Pressure the bet if you're long. Add to it. If it breaks down, abort the trade. You know, below 210, 209. Ideally, if you're a bull, 215 holds. So those are the indexes, and here are the 4 stocks that I'm watching the most. We got an outside week here on PPO, on Airbnb. PPO accelerating, which I love to see, a new histogram high. So as a trend follower, you're just going to look at this chart every week, and as long as price remains above the yellow and orange line, there's nothing wrong. You just enjoy the trend. An aggressive trader will zoom in to the daily and use this chart to help them take profit. I'm using these fibs. I do see a big cup here forming. A handle would be nice. I do see an obvious series of higher lows and higher highs. The 20 and the 40 are doing a good job of giving you that visualization. The slope here is exactly what you want to see. The 40 at the bottom, sorry, the 100 at the bottom, then the 40, then the 20, 10, and 5. I mean, it's like it's a perfect bull trend. Now here's the bad side. Here's the bear side. The PPO histogram is showing you that the bullish momentum is waning, and really it peaked back here. So this is going to end. That's how I see this. The question is when. We don't have to guess. I've got some targets up here where I will be taking profit, primarily because of this monthly chart. I don't like big red candles when price gets to the top of them. It generally, you find sellers. So in this particular example, that would be 173.44. And if you zoom all the way in, I've got some even better targets, right? I think let's turn the after hours off so you can see, yep, there's a gap right here. Let's get rid of all these false. All right, we got a gap right here, another candle high here, We have this trend line. That makes perfect sense, right? 1, 2, tag it somewhere over here. We've got the fibs. So if this is our 5-wave move up, we're looking for a 3 to complete somewhere between 1618 of wave 1, 2, 2, or 2618. In this instance, I'm going to just go something like that. We had a really steep 2, so we're looking for a shallow 4. It's possible that we have some ascending triangle 4. That's why it's got such a sharp trajectory higher. In the end, I'm going to be taking a third off as we get into the 173.44 to 177 range. That's my plan. Look for a pullback. We've got an alert set here at the 40, an alert set at the 20, or we'll set one at the 20. Your invalidation becomes 157.41, so even at close, your distance to risk is 5%. We don't have any PPO bearish divergences, and this angle of attack is sustainable, right? This isn't something that is like this, that will die out in an instance. And, let me show you exactly what I'm talking about. Uranium, right? This is not sustainable. That's not sustainable. It's too high, right? This is sustainable. Look at that angle. That's a sustainable attack. When they come in like this, it's a squeeze, and it's definitely bullish, don't get me wrong, but it's telling me they're exhausting all the bulls, and they're just throwing everything in so that they can let it die. And that's exactly what they did. They closed at the high on the day on September 15th. It's on the front cover of the Wall Street Journal. Uranium. Everyone's talking about it. Well, what had it just done? I mean, this is an ETF, guys. This isn't a penny stock. ETF in 1 month had gone 65%. In 1 month, straight up, and had a volume climax. Volume is telling you way more than price, okay? Because at this price, everyone wanted to participate. Well, I find it awfully strange that aligned with this supply line. It always does, right? Then the close below SMA 10. If you didn't lock in profit, I'm sorry. You haven't missed much yet. You're still up quite a bit. Sorry you didn't nail the high. You don't get to nail the high. As a trend follower, you got to wait for a loss of a moving average at the very minimum to signal that the trend is coming to an end. Just because you get your signal doesn't mean the trend will end. Nothing's 100%. But we play the probability and do it over and over, and as a result, are rewarded. So in this instance, I believe you're going to have a really, really strong rally off of this $24 level. No doubt about it. Maybe it's 23, maybe it's the daily 20. Let's just not guess. Let's watch price on the hourly chart as it comes into 23.88. Let's look for a sign and signal of a trend change. And then if and when that happens, you can market buy against that signal as close to it as possible. And that way you're not guessing the bottom. That's kind of one of the ways that I do it. I want to see other buyers that show up, and then I just market buy. So yeah, this is just one of those things where Airbnb's angle of attack, much more, like this decline here, much more steady and sustained. That was two and a half months, right? This angle of attack, not sustainable, only made it a month. Yeah, so I like Airbnb a lot. Let's talk about Twitter. I like Twitter a lot right here too. We did have this classic diamond top, this bullish harami here on the 14th. Let's take that off so it's much clearer, right? This big bearish engulfing, followed by an inside doji. And then as soon as they closed above 60.70 on the 15th, that was your signal to market buy. And then since then, she's gone straight up 3 days in a row. We've got the momentum returning. The momentum indicator is confirming that. She's holding the 200. We need her to capture the 40, and then she's free to march to all-time highs. That is what I am anticipating in this pattern. This would be the final wave. Something like that. Before the next, big correction like this. Right? And you can just clone that, right? And that's what we would be looking for over time. And we were looking for it to just signal off of this supply line at some point when this is done. And looking back to here, this is obviously the level where there's lots of supply, but this is a large cup and handle, and you have to be patient with this pattern. And again, the angle of attack on this 40 is going to tell you, right? We're going to know by the end of this year whether or not this trade is working. I bought down here at the 40 when this ABC correction had completed. I love the symmetry of that. And I loved the way that the math lined up too. Exactly right here, 1.0 extension, that 51.55 level. That was our demand line. When I have a fib, a moving average, a gap level, all that stuff aligning, you start to get a large confluence of demand, right? That 50.53, all of that was telling me that was our level. We bought in here, we sold up here. Why? Well, all of the high of this candle with all the sellers was up here. That's where the diamond top came in. We liquidated half the position. We started adding back here at the 20, I think $63. Didn't nail the low, and then gave the buy signal again last week for the final add down here. And now back to 100% full position. And this is how I swing trade. That's how I do it. Now I'm looking for a 5-wave move up to all-time highs. At this point, that's what we're looking for, $80. And the weekly chart is confirming, right? We do have this PPO acceleration to the downside, which is not the best look. I will agree, no doubt about that. But as long as 59.74 holds, as long as the 40 holds, I'm bullish, and I am assuming that the trend is my friend. That's it. If the trend fails and rolls over, then we got something to talk about. Until then, buy the dip is what we're doing. Let's take a look at TLT for a minute. I do want to bring this up because everyone's talking about it again, and it's of interest. Let's make sure this is as tight of a line as I can make it, right? Something like that, right? So we're as close as we're going to get to this trend line. The same way we just saw confluence of demand on the lower side for Twitter, right? A gap, fib, moving average, etc. We have a confluence of supply for TLT. Okay, right here. So it makes this trade real simple. You want me to buy? Get above this level. And we'll market buy. And that's the strat. It's real simple. I'm not touching this until we find acceptance above this pivot. The market loves symmetry, like even that right there is what we got down here. Up, those same buyers capitulated down here when they realized it was over, right? Question is this 5-wave move completing into a beautiful sell setup into the supply of SMA 100, former pivot here, a market high here. I mean, look, like you have the sellers, you have the volume, it came in, but they're going sideways and are above and still above the 10. So this guy's trapped between the 100 and the 10. Let it resolve. Let it tell you if it's time to move our money into bonds, then 154 will break And if that happens, we're ultimately targeting something like that, right? And what's our risk? Distance to the confluence of demand, SMA 40 and SMA 20. And again, just like this angle of attack that I keep talking about, we're going to know by November what's happening with bonds, okay? This fall is going to be very exciting for the market. The summer has been very boring, but you're going to get some moves. And if we see that it's time to allocate into bonds, well, then that's what we're going to do. If we see that it's time for IWM to outperform, then we're going to stay concentrated in IWM. That's what I see right now. I see the risk reward is best in IWM, and it's possible that IWM fails, that everything else topped, and when it topped, it was topping after IWM topped. IWM topped back in February, March. Qs are topping now in September, right? And that's what I say when I say like IWM's leading the markets. You know, they tend to be the risk on, risk off metric that I use. So as you go into this next week and the final month, recognize that these monthly patterns are playing out. And, you know, we're going to get closure on these candles in 2 weeks. And that those monthly candles will also close quarterly candles. And the best pivots for major tops and bottoms, right? They always come around quarterly candles. I'm not saying that we're going to get a major pivot. I'm just pointing out that the major index that we look at are now red 2 weeks in a row. This is setting up a red month. Now, it's still inside. I get it. We're still inside on all the major indexes. Still inside. Nothing to be worried about yet. Okay. That being said, if this selling continues and we do lose the 10 on the Qs and we're pulling back to the 20, or we're pulling back to this gap fill at 349, and we are pulling back, right? This rising, ending diagonal, rising wedge, whatever you want to call it, is breaking down. We're pulling back. When this breaks down like this, what it implies is you pull back to here. Okay? So we're pulling back to 400. In that scenario, it's time to move to bonds. There's no reason to sit in here. It's not, oh, it's time to long the VIX. We're not VIX traders. That's not what we do here. You know, we can hedge our portfolio. We can hedge some of our longs. I'm still long SPY from back here. Right? But if I bought SMH here and here, I can't be holding through a pullback to where I bought last time. Right? The way that I've done this, I bought here, sold here. I bought here, I sold here. I'm waiting to get back down here to buy again. You know, I'm not the type of trader who holds through breaks of SMA 10 and SMA 20 on weekly charts. Okay, when daily consolidation hits, I'll sit through some daily consolidation. That's okay. I can tolerate a daily ABC. I can tolerate SMH pulling back to fill this gap here at 263.80. I'm not going to tolerate SMH pulling back to the 200, filling these gaps down here, which is weekly and possibly even monthly consolidation. So just keep that in mind. We've got volatility. It's returning. One close below the 10 does not make a trend. We did it back here. We've done it here. It's all about what happens next week. And, you know, we are looking for a rally. We are now on day, you know, starting from the top, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 of this pullback. So we pulled back 11 days in a row, which is rare for the S&P 500. This is a correction, right? All these other pullbacks are 4 days. There's 11 days in a row, right? When we find support, because there's lots of support down here. The question is, how deep are they going to go? When they find support, we're looking for something like this. I have no other way to look at it, right? They come up and set a new high, then maybe it'll be something like this. But there's a long way to go to repair this weekly PPO. And if you look at the monthly, is the monthly now starting to pull back? And when this happens, look at what you get with price. You get a big range for a year. The price isn't going anywhere. So is that what we're starting here at the final end? It could be. I'm anticipating something like this. This range here, that's what I'm anticipating. You know, something like that for the next year or two until we figure out who the next president is. So once this top is put in, sometime in the next 3 to 6 months, that will last a year. When that is put in, it's going to be all around the presidential cycle. It always is, right? 2018 into 2020, right? This was all around who's going to be the next president. And that's your corrective pattern, an expanding ABC. They're exhausting. They're so exhausting. Right? So why couldn't you have something like that again? You definitely could. It's just from where. I don't think it's happened yet. I do think we have one more in the tank. I do think IWM is the tell. But again, if I'm wrong, right, I'm heavily positioned right now in IWM. If this bet is wrong, then it's likely that the gold, the GLD, the TLT bet is going to be right. I don't see gold being right. I look at GDX, I look at GLD, it's not ready yet. Come down to the 200 at minimum and zoom out. What do you have happening here? You have a much bigger correction taking place. We've already rallied from the 50 once. It's no good. So when I see this, I see all these trapped longs. If they use this as their stop, you get acceptance below here, they're going to capitulate. And that's going to force something like this. And then it's a buy. Not yet. You know, I don't see gold as a buy yet. Now they save this 3064 level. They quickly reverse. They get back above the 20. It's something else to talk about. The structure will look different. But right now, I don't see it. So long equities still remains the play. Rotation into small caps still remains the play. Individual names are outperforming the indexes. Names like Twitter, DHR, Now, CRM, ENPH, Disney, AMRC, KE. These are the names we're looking at. And I'll just go through a couple here. KE, obviously, high on month, high on week. That's the exact opposite of SPY. That's what you want. That's the type of super performance we're looking for. TWLO, high on week close, high on day, 3-day rally in a row. So we're looking for any type of pullback into the 10 or the 5 to start the week. Press that bet. ENPH is another one. Rallying from this demand zone. Made it look like they weren't going to do it. And then into Friday's close, kind of saved the candle for the week. Putting in what I see here is a little start 1-2 of your final 5-wave finale. This is what I keep seeing over and over and over again. You know, I think we're in wave 5. I think the end is near. I just think it's probably not for 3 more months. maybe 6 months even. They could probably last this out until March if they wanted to, but I think it's probably going to end in February, January, February. Yeah, same thing with NVIDIA, right? Like these leaders, they're going to take a breather at some point. You know, these things cannot go on forever. But what it does is it enables rotation into other components within SMH, AVGO being the example. You know, these names are certainly pain. Look at that doji. Isn't that a higher low? Isn't this the first dip after a breakout? Yeah. I mean, maybe we're even going to get lucky enough to get something like that. How amazing would that be? To get a breakout and then back test of the breakout. I mean, that doesn't happen as textbook as it is. Generally, it breaks out, then leaves, hits the destination, and by the time it pulls back, the whole move is over. So, you know, there's plenty of names that are performing. You just have to be in them. You can't have your money in the names that aren't performing well. You won't make any money. So rotate your money around into the names that are outperforming. And if the indexes rally here after the FOMC, then you're well positioned. If everything is crumbling and we're at the start of a waterfall decline, by the way, that is very possible. Then you can hedge, you can move your cash into TLT and see if bonds are finally getting their day in the sun. And that's the plan. I know this video is a bit long today, but I had a lot I wanted to discuss. If you like the content, hit the like button, subscribe to the channel, check us out on Twitter, and we'll see you in the next video.